I do still think you can buy stocks. I mean, we're trading at 15.5 times forward estimates. We got as low as 14 times. But this time a year ago, we were at 19 times. And I would argue that the obstacles of the Fed, the obstacles of the government shutdown and China trade, they're starting to slowly go away. Now, we still have to get through trade, but it certainly sounds like they are making progress. And in the meantime, what I'm looking at is the data in China is actually stabilizing. And it started in December when we got online retail sales that actually increased. But we got credit figures last week that showed credit was up 17% in January from 10% in December. So slowly things are getting a little bit better. And I think we really need that economy to do well or at least stabilize for us to have another leg higher.
But the trillion-dollar question, Stephanie, I'm going to follow up with you, is a trade deal already baked in now?
I don't think so. Not at these valuations.
You don't think so?
Look at, so for example, Citigroup upgrades Freeport-McMoran today. They upgrade copper. All the charts are saying it looks great, all that sort of stuff. The stock wouldn't react if it was already pricing in trade. The stock's up 6% today. So I think that there are pockets in the market that certainly are not pricing in fully trade. Some for sure, and that's why the cyclicals have led year to date. But I still think that there's more to go because a lot of these stocks are still down so much from their highs.
And Sarat, I said it on Worldwide Exchange this morning, you know there are people out there watching, and I'm sorry if I offend them right now, that sold in December, maybe in a huff, and haven't bought yet, and they're looking at this market and they're hearing all these stats, and they may get in. Are they buying at the near-term top?
So you have to actually parse that out and say, are you looking to invest 2-3 years now, or are you looking at the next 6 months? There's no question we're going to get some type of pullback, whether it's 3 to 5%, some headline news comes, whether it's trade related or not. But I agree with Stephanie. I mean, you look at kind of the valuations that we have today, even compared to what they were 2 months ago, they are cheaper, and we've got a little more runway going ahead in terms of where we want to put our money.
So we got our 10%, and that's taken us above 2750. I think the harder part when you talk about double digits is getting the 20%, which means you take out the 2018 high. What's interesting is I think the market is pricing in, and last week I began to wonder with some caution, if you see that high from 2018, that 2950 print again, does that change the thinking of the Federal Reserve? Because certainly a 2350 print, Brian, in December changed the thinking of the Federal Reserve. I am beginning now and hearing the comments about rolling back the balance sheet. If you're going to continue with the communication that Chairman Powell put forth a couple of weeks ago, which is we're going to back off, and they are truly going to back off through 19 and probably into 20, then you are going to take out that high. And I just think we're back to that sea of liquidity again.
Here's the uncomfortable question, though, Joe. If the market, I don't want to say collapse, if the market slide in December changed the Fed's thinking to dovish,
yes,
does this market acceleration rechange the Fed thinking back to the way it should have been or was prior? Because the inflation data, while not hot, certainly isn't cold.
So again, last week, Scott Wapner and I had that conversation, and I was offering some caution that I agree with you. I think that's the proper thinking, that if you return to 29.50 and earnings accelerate, that yes, you could have that conversation. However, I think there's been an indication in the last couple of days from Federal Reserve members that no, they are really going to sit on their hands. They're going to ride out 2019. And if that's the situation, then
they've also said,
let's let John get it. John?
I'd agree with the desk. I think one of the things, in other words, I think there are plenty of stocks you can buy. I'm not buying the broad market, just willy-nilly throwing money at it.
You wouldn't buy the SPY.
I'm not a buyer of ETFs most of the time anyway. But I'll point out that year to date, we're down 27, 28% in the VIX. We're down 51% from the Christmas Eve high in the VIX, which was, of course, the recent low in the market. The reason I point that out is insurance is so cheap right now. I mean, you're buying insurance on a market that's gone like this. Why wouldn't you do that? It's prudent to do that. We always try to emphasize it, all of us, that it's good to take money off the table when you've got some winners. You want to let them run. How do you do it? Well, one of the ways you can do it is by snugging a put up under the market. And if you don't want to buy a put, then you go over here to the
John,
VIX.
you travel all the time. You ever buy the travel insurance?
No.
Okay, so you know how they do it, right? The more chance you think that your trip is going to be canceled, you're going to have an issue, the more likely you are to pay up for that travel insurance. If it's cheap, you don't care. So answer your own question. Are people buying insurance just because it's cheap and they think, why not? Or do they feel like it's a good deal and maybe there is risk?
Well, to your point, top of the show. So we've had this huge run in 2019. And you want to realize some of those gains, but maybe you don't want to have a taxable event right now. You could buy a put in the S&P 500. You could buy a put in the NASDAQ that's outperformed the S&P 500. Both of those would let you sleep at night saying, you know what, I'm not going back to feeling as bad as I felt in January.
How expensive are they?
Very cheap. I mean, again, it's half the price, literally half the price that it was on Christmas Eve. So in other words, if that travel insurance you're talking about was too dear, which it certainly was Christmas Eve, you're buying it now for half the price. So instead of spending $5, you're spending $2.50.